All right, we'll go ahead and get started. My name is Sarah Schaefer. I'm with Top Producer Ag Web and Farm Journal. And today we have a webinar that features Chris Barron. And he's going to be talking about how to make better profit decisions for your farm. He spoke at the 2012 Top Producer Seminar in January. And so this is a recording from his presentation. So during his presentation, if you have questions, go ahead and type them into the question field, and then at the end of the recording, Chris will be live to answer those questions. So you can ask him at any point, and then I'll hand those over to him during the Q&A portion. You'll also have the opportunity, I can unmute you, and you can ask the question directly to Chris yourself. So as I mentioned, this is a recording, so you'll hear a little background noise at some points, and he may reference things that aren't shown on the screen, so just bear with us and he can answer any questions you have at the end. So without further ado, we'll go ahead and get started with the recording.
A little history, we farm with a group of producers just in our own particular area, and we've learned over the last few years the idea of putting together some decision tools in order to remove some of the emotion. Obviously, marketing has been one of those things. It's been a huge driver on the emotional side of things. And so, you have one person here with the perspective thinking, well, $7, we're unloading all of it. And you got somebody else on the other side saying, well, no, that's not enough. We're going higher. Or just the differences in how you view your risk management program is very critical to how you make your decisions. And so, every day, we get up in the morning and we have to decide which shirt to put on. So, if we want to cooperate with each other and think about how the day's going to go, we got to, first of all, understand the decisions that we're going to be making impact our success. And so how do you get the emotion out of that? Because, because attitudes are really what drives the emotion and what drives decisions. So what I'd like to do is kind of give you a brief outline of the importance of why do you want to use decision tools. And number one thing I'll point out, and you'll see that as we go through it, the value of simplicity is big. I see a lot of cost reduction tools and all these analysis things from looking at cost of production to looking at balance sheets to looking at cash flows. And the more complex they get, sometimes you can get more information out of them, but a lot of times you just get tons of information overload. And the other thing is you need to be able to be very timely and quick with this information. So I'm going to touch a little bit on a idea or a theory that I came up, which I call the profit triangle, and your audience will be, this will be the first audience to see my idea of what I call the profit triangle, and I describe to you what that is. And then we'll talk a little bit about market prices, inputs, and yields, and that is part of this profit triangle that we'll discuss. And then we'll look at some examples, and we'll use one tool which is our primary decision tool that we use. Now, all of you can build spreadsheets or you can do things. There's tons of services out there, but what you really want to look for are tools that help you make decisions so they're fast, efficient, and accurate. Because if we're making decisions in this marketplace and the market's moved 40 cents in one day's time, what's that done to our margins? So we need to be thinking about that. So why decision tools? Again, numbers demonstrate reality. They improve accuracy. I got this quote in a workout with one of my sons. It's in wrestling. The coach was telling the kids, hope isn't a goal. You better know where you're at. You better be planning, and you better have your system ready to execute. Quality information, again, it's getting the right information together. It's having the motivation to move, and we'll talk about motivation in a second. And then better timing, just understanding that there's different types of timing. There's market timing. Sometimes that's within minutes. You can make thousands of dollars worth of decisions in 2 or 3 minutes. But you also have got land purchasing decisions, you got landlord conversations to have, and how are you communicating with your landlords when you're looking at renting land and discussing value and those types of things. So, bad decisions are made oftentimes by many of us, and this is just an example, and if you can't see it in the back of the room, the dog's going after a ball. The problem is there's two of them there, and they're not the ones he's thinking of. And sometimes it's just an illustration that when we're making decisions, sometimes we're going after the wrong ball. You know, we're thinking, okay, we're looking at the markets, or we're looking at our costs, and maybe thinking of costs on the input side rather than thinking of value. You know, so what are we getting back? Is it always price? It's not always price. It's always value. And we'll discuss some of that here again too. Motivation. One thing that's interesting right now is as producers, we wake up in the morning and we're making money. We don't have to do too much right. I mean, we can, you know, put a crop in, and there's some parts of the country and some producers I talked to in Kentucky and some different areas that put a crop in 3-4 weeks later than they normally do and still had a great crop. You know, and even if the yields weren't there in many of our operations, the prices were there. So we've had some phenomenal opportunities, so it becomes kind of difficult for us to really motivate ourselves. And realistically, I would say that in good times, that's usually when we make bad decisions. And in bad times is usually when we make good decisions. So the idea behind that then is, while we're in these good times, let's try to figure out what the good decisions are that we need to be making and step back a little bit and say, what are we going to have in place so we aren't making bad decisions when this thing cycles? Because trust me, it's going to cycle. So, you know, why are we not motivated now? High prices, good yields, strong financials. I mean, most of us have some of the strongest financials we've probably ever had. We get overloaded with our production side of the business. It's a lot more fun. I enjoy it 10 times more than some of this stuff, but I've learned that this stuff makes us a lot more money. So you can go out and still do that stuff as long as we're doing the financial side of it. You know, inputs are locked in for the most part. We'll use 2012 as an example, and as we look at a corn example on a spreadsheet, I'll explain that to you. Perceptions of strong prices to continue. You know, we heard the discussions yesterday about volatility, and then at the end of the day, we heard no volatility, so who's right? No one knows. But what's right is understanding your own business and your own situation and not what somebody else tells you. It doesn't matter what I think or your peer group thinks. It's what decision you come up with. Now, it doesn't mean you shouldn't have them. You should. You need to have that diversity so it causes you to think, and then you ultimately make better decisions. The other thing, too, obviously, we've seen some phenomenal margins. So what will motivate us then? The need to improve our marketing skills, and that one should be motivating all of us now, unless there's somebody in here that sold all their corn last year for $7.30 in here, and I don't, and then they wouldn't raise their hand if they did anyway, probably. But, you know, so that's the thing, is understanding that there's tons of opportunity on the marketing side and how we make decisions. Lower prices, but rather than just lower prices, it's about value. We'll talk about that. Agronomic problems. Last year, as an example, we had a 75-mile-an-hour wind that went through our farm, laid all of our fields flat on the 10th of July. We were hoping for 110 bushel corn. The tool I'll show you here in just a little bit is the tool we use to keep our perspective. And again, it was tied back to yields, inputs, and price. Well, the price was good, our yields looked bad, but what does that mean to margin? So that focus on margin. We'll balance the office work with production. Again, I still think we probably tend to spend a little bit too much time on the production side, and that's good. That's why we're growing phenomenal yields even when we had all kinds of challenges. Let's try to maybe look at that on the financial side. Perceptions of risk ahead. I mean, if we start thinking that something's going to change, if we start thinking that in 2013 interest rates are going up big time, or 14 or whatever, we're going to start preparing. But maybe if we think it's out there quite a ways, well, we got a little time, so we lag and then we take off, and maybe we aren't climbing the hill fast enough. So it's just pointing out the idea of becoming motivated. Just as an example of understanding the importance of margins, is that basically, and this is a soybean chart from 72 to current, and you can see our margins are tight. We really don't have usually any long period of time where our cost of production spends much time below what our price opportunities are. So if that gap in there is where our opportunities are, we need to be looking out ahead, but we need to have tools to help us make those decisions. If you look at the corn one as an example, you can go through there from about 96 through 2005. If you didn't put together a pretty darn solid plan and have a balance sheet that was pretty well bulletproof, in 96 going from 99 to 2005, it was kind of rough. And we all lived through that, and all you guys know how to do that. But we're probably going to see those things again, and we're sitting in a very strong financial position right now. So my word of advice, if there's anything that we all take out of here today, is figure out how we're making decisions so that we can tolerate another one of these cycles. I like to start out or work through a system so that everyone understands goals. And again, it's about that combination of the three parts of your system when you make decisions. I mean, we all look at our results. We look at our balance sheet at the end of the year, and we gauge our success off of that. But I think that sometimes we need to step back and maybe take a more simple approach to that. That's very important, and that is the bottom line. However, your success and measuring your trends over the years is really definitely going to be tied to your individual margin on your productivity for your crops year to year to year. So it's being able to say, okay, what was my margin 5 years ago, 4 years ago, 3 years ago, 2 years, 1 now, and then what's my projection out a couple of years? Then when you can build that trend line and build a projection, then you can kind of say, okay, I had a 40% margin last year, the market prices don't look as good this year, what is a reasonable margin goal? Set a margin goal and then go off of that. And then these three components are tied to that margin goal. So, just being disciplined, again, it's about value with inputs, being disciplined with market plans, and kind of looking at that bottom line as a risk management system, because again, we've had some phenomenal years. And then the other thing that I see that we tend to do, and guilty here too, we tend to lock in one side sometimes and not the other. And a lot of us learned that lesson in 2009 when all of a sudden, in 2008 the prices were really good. And so we went ahead and started locking in these inputs because they were really taking off. Well, the problem is the inputs took off. A lot of us got those locked in, and we were forgetting the other side of the equation and getting those bushels locked in. So that's why I think if you can focus on margin rather than price, yield, or inputs, all those individual things, you got to look at the whole system as an approach. Basically, one of the things to think about is bushels needed to cover your expense. And this is a great tool when you're having negotiations with landlords and those types of things. If you start working towards having conversations about, well, it takes 56 bushel to cover my land cost, or it takes 23 bushel to cover my seed cost, or 18 bushel to cover my machinery cost, or whatever it is, you start thinking in terms of managing that margin and tying it to bushels. And so, that's one key thing, but the challenge is you got to have a tool to do that with. So you want to make sure that you either build one, find one, or get a hold of something, and it needs to be simple and user-friendly so you'll actually follow through. And then kind of the same thing, too, as a percent of cost, and you'll see that on the spreadsheet. So if you've got an individual line item, say land, and it's 32% of your cost, what was that percent of cost 5 years ago? What was it 4 years ago? And again, the same thing. Understanding the trend of your percent of cost for each individual expense. Then you can have a lot better perspective of what's really going on. Your land rent went up $100, okay, but what does that mean? Everything else went up. What percent did it go up? And is it relative to the other stuff? And is it in line? And whether or not it's in line depends on your own individual operation. Therefore, you got to have your own numbers to compare to. Or in the event if you've got a peer group and you can put this kind of a tool together, is another great opportunity there. An example I'll give you is on the insurance side. The last couple of years in this tool we have, and I won't have time to show you today, so I'll just tell you about it quick, but insurance calculator, which calculates three important things: your APH, your spring price, and your percent of coverage that you want to use. Well, when you can go ahead and look at, okay, if I'm at 80%, I'm still not quite covering my risk gap. Say I'm still 50 bushel an acre away from being covered. A lot of times we look at that insurance cost, not as value, but we look at the cost and we'll say, well, gee, it's going from $30 an acre to 60 bucks an acre. I'm not going to write. And then we look at the amount that they're writing the check out for. Which is, we're writing that check out for $60,000 instead of $30,000. There's no way I'm doing that. But I would argue that you got to come back and look at, as a percent of cost, what are you getting back for that? And if there's additional bushels you can market, what's the value there? I mean, if I can be selling ahead another 20, 30, 40,000 bushel of grain at a higher price, in addition to knowing that there is no gap, particularly the last couple of years, we've had such high APH, we've had the ability to buy crop insurance at levels that we basically had no risk. So, you know, if you look at it, 3% of the cost covers 100% of your risk. So it's just thinking a little bit differently when we look at these things in terms of value. You can't see this very well, but I'll have it in a spreadsheet in a minute, but I just have this slide here so to point out that one thing that I think is critical, if there's anything you take home today, is to make sure that you have a way to understand in your business what your break-even sales price is at every yield level. And that doesn't mean that you do it at the beginning of the year and then forget about it, or put it on the refrigerator and print it out and then look at it once in a while, because this is a moving target. It never stays static. So this is something that, again, if you have a tool that's on your desktop, on your computer, you can click on it in the mornings and look at it and see where you're at. With having this understanding, too, you want to have this comprehensively inside a system where you're also putting your marketing information. Because a lot of us have a tendency to stack up our contracts, and sometimes we've got them written down and organized, and sometimes we don't. And I ran into a couple of situations last year where I know some guys had some corn sold, and then all of a sudden they were out of corn, and vice versa. And, you know, they found out that they didn't have some sold. They thought they did. And so it's just a matter of keeping track of all of this stuff kind of in a comprehensive system. Another quick question I'll ask, you know, in terms of the variables that we're dealing with, and this is a 20-cent example, but like the thing I can think of is after the report in January, the market dropped 40 cents that day. The question I would have is, what happened to your margin that day? How much did your margin change? We all know the price changed 20 cents, but what did our margin do? So if you've got a tool that you can go in, boom, plug that 40-cent change in there, where's my margin at? Doesn't mean you're going to freak out and make a sale that day, but it means that you're going to at least have a good perspective of where you're at, and it just helps you to make better decisions over time, having that way to analyze things. And additionally, I would say on a bushel situation too, it's kind of like I said, we had that wind, knocked all our corn flat, we were thinking 100 bushel less. So we started doing stress testing on our system to see, well, gee, you know, where are we comfortable with selling grain? Well, as a consequence, we sold a lot of grain at a lot higher price than some of them did, because it gave us a little different perspective of maybe our yield was going to be lower, but we still had the confidence to make sales because we knew how many bushels we had available to sell. So here's the profit triangle as an example, and what I see us doing in agriculture, and again, guilty is charged here, we spend a lot of time focusing on markets, so we deal with a lot of time on that part of the triangle, and we kind of forget the other stuff for a while, sometimes for a day or two. Then we focus on inputs for a while. We might be working on inputs, and we're getting our seed done, and we're trying to get the herbicide stuff done, and we're trying to get kind of locking in those last couple of land rents and things, and all of a sudden we're distracted, and in the meantime the market's bouncing around and there's some things going on that we don't really know or haven't been paying attention to. All of a sudden, you know, things have happened and we haven't been paying attention. And then the other part is yields. As I said, you know, something can happen during the growing season. All of a sudden you need to throw a fungicide or additional nitrogen or whatever into your system. Well, how does that affect your margin? Because if you're looking at just the cost of that additional N and then you're managing it from an agronomy standpoint, yeah, it's the right thing to do. I can improve bushels and stuff, but it's also the component of having that tied to price. It's all those things basically are what's really, the bottom line, are tied to margins. So it's keeping that eye on what's important all the time, but having all of this and it's that simple. It's just those three things. If you can get those three things nailed down. So the benefits then of some of the things that you can accomplish by either building some of these tools or, and like I said, they're available through universities, lots of individual suppliers of these types of technologies, and obviously we've got all kinds of systems within our pool. Crop rotation, side-by-side information, that needs to be extrapolated right out of your system immediately. Rapid yield changes, as I said, you know, looking at whether you need fungicide or nitrogen, equipment trades, looking at your machinery costs, how does that affect your margin? If you're trading, say you're going to do a mud deal with Deere and you're going to roll 5 pieces of machinery, that's well and good because you probably need it. But how does that impact your margin, not only for this year, but maybe for the next 2 years, plugging in those prices that are probably a reality? And then just kind of looking at the risk management portion of the plan and the insurance piece.
That concludes the recording portion of our webinar. And so now we'll have the opportunity to ask Chris Barron questions in a live Q&A. So you can go ahead and start typing your questions into the question box. Chris, would you like to go ahead and introduce yourself to the group?
Yeah, sure. I basically, as I said, in the discussion, I farm about 12 other individuals, and so I'll just kind of leave it at that. You know, we put a lot of emphasis and importance on having tools that we make decisions with. I like to tell people that in our group we make statements that in God we trust everyone else to bring numbers. So we like to know that as we make decisions, they're based on facts, and we try to remove emotion as best we can. And so I guess if there's any questions anybody has or any questions you'd like to throw at me, I'm open.
All right. Well, I have one to go ahead and get us started. You mentioned how a lot of times farmers can get information overload from all the different things that they can be tracking about their operation. So what advice would you give to someone to help keep their marketing and margin plan manageable?
That's a great question. I think the big thing is to keep it simple from the standpoint of putting your cost of production on one sheet of paper and keep track of your marketing on one sheet of paper. Factful will probably be on the same sheet. It can be on a spreadsheet. It doesn't have to be complicated. The simpler you make it, the more apt you are to use it. And so that would be my biggest recommendation is to kind of control that information overload. I think we have a tendency to think that we have to have little special tools for some of these decisions, when in reality, you know, the simpler the better in any case. So again, just that cost of production, having a list of what your costs are, having the spreadsheet able to calculate yield, price, and give you a margin based off of that information, and make it that simple. So it's on your desktop, you click on it, and open it up, and there it is, and you can use it, and just keeping it simple.
Great. All right. Well, I have a few more questions while we wait for our attendees to submit a few. So one we talked about earlier, Chris, is obviously right now farmers are itching to get into the field, and so it's probably a little hard to be focusing all on the business side when the production side is so much in the focus right now. So how could you help? Obviously, if farmers keep their marketing and margins plans on one sheet of paper, how could they also condense the time that they spend on that during this busy season?
Well, I think that's the beauty of keeping it simple, is it really doesn't take a huge amount of time, you know, 10 minutes a day or 15 minutes a day. You know, half of that time is the front part of the day, and the other half of the day is to kind of take a look at where you're at. Some of these margin costs will change. You know, we all tend to make changes to our plan during the process of planting season or whatever, and that can change our cost of production a little bit. Obviously, the markets are a moving target, and so as those move, understanding how that impacts margin day, I think this is critical. But in yield, too, we go into a dry spring here with conditions that are drier than normal. That might be good, it might be bad, but it's being able to run some scenarios real easily and change your yield 20 bushel up or down and see how that impacts your yield as you're making decisions on marketing and that type of thing. I think it's pretty important.
Great. And as we noted, Chris is our Ask a Margins expert blogger. Have you gotten any questions interesting lately that might serve as a good example for the farmers we have on the line today?
I think the big one is just, how do you get these tools put together and that type of thing. And I guess that's kind of the area that I specialize in with our group, is I can build these simple spreadsheet tools so you can make these decisions from. So I would just encourage, anybody that's on here listening that, get a hold of me one-on-one. I'd have to do a webinar or a quick explanation and be able to email the tool out that they can use that would exactly do what we're talking about now as far as making decisions in a timely manner. And ultimately, that's the key to success, profitability, decisions that come down to that. So.
Great. All right. Well, this is the last call for any questions from our attendees. So, Chris, well, thank you for giving us some of your time on this beautiful spring day, and we really appreciate the insight that you've provided.
Okay, thank you.
All right. Well, this concludes our webinar, so thank you to everyone who attended.